Well, David, I think it's important to point out, and our viewers may not remember, but when Comcast bought NBC Universal, it was viewed as being not such a great acquisition. Stock went down 7%. When Comcast bought AT&T Wireless, viewed as being an overpay, down 7%. Some could argue that being down 4%, I think it could only be down 5-6% because of a couple of downgrades, really is the pattern. But against that, David, I guess you got to talk about how much more they paid than we would have thought even a week ago.
Yeah, $3.7 billion overall. If in fact Disney does tender, even without it, eventually they're going to probably have to buy that. So, yeah, that's a lot. That's a lot. And again, 1075. I think one of the lessons here, and I said this on Friday, guys, is if you are in a position to sell a company, it really is very helpful to have a second bidder. When you think about the $18 billion in additional value that was delivered to Fox shareholders as a result of Comcast's desire to own those Fox assets were for sale, or in this case, the many billions. It wasn't just $3.7 billion, remember, it's from 1075 up to 1728. The percentage increases are dramatic because of the presence of a second bidder that desired the assets. So always very helpful to keep that in mind if in fact you have a company that is in the process of being sold or is considering it. Jim, short-term in nature, this decline in Comcast stock, or something that's sort of going to reset the price for a while?
Yeah, well, look, the stock was at 31.32 when people started getting the sense that maybe they could win Sky. Goes up to 36.7. Maybe they can get Sky for not that much money. They can't get Sky, or you could say they overpaid. I said they couldn't get Sky for a little bit higher price. The big shock here, David, to me, Disney should be up 2-3%. I really think that this was terrific for Disney. I know there's convolution about what will happen with other parts of this deal. Can you give us some clarity on why Disney would not tender, take the money, lower their debt, and therefore be able to increase their own buyback, which Bob Iger's been totally committed to?
Listen, everything you said makes perfect sense and is a reason why they very well may choose to tender into the 1728 offer. If they choose not to, they would do it with the belief somehow that they might be able to get more. Remember, under UK takeover law, you need to actually have 50.1% of the shares tendered. If they don't tender their 39%, it does put Comcast in perhaps a somewhat precarious position of having to get 50.1 of the 61% that are out there. Unlikely at this price they wouldn't be able to do that, but there is also the possibility of a further deal to be done down the road for the Hulu stake, 30% of which is owned by Comcast. We pointed out many times, would Disney want to own the remaining 30%? Do they really want to be in partnership on Hulu, and conversely in partnership to a certain extent, of course, both minority positions being the other side in Sky? Jim, we'll see. They haven't made a final decision yet as to whether they're going to tender, but your point's a good one. Immediately raise, what, $15 billion to help you pay down debt? It makes some sense, doesn't it?
Yeah, well, every time that Bob Iger's done one of these big deals, he prides himself on the idea that, listen, not only did this not hurt our balance sheet, but you're going to be surprised, like with Marvel, how quickly we can delever, how quickly we can start buying back. But Comcast has tremendous cash flow. What I don't like is the duplicity of analyst reports. It was supposed to be a gem, the jewel, if Disney bought it. Suddenly, it's too expensive. But Comcast bought it. Comcast has wanted to be international. These are some very good assets. Suddenly, we're seeing all these chinks in Sky that I didn't know when Disney was trying to buy it. So I think that this is going to be the typical pattern. I think Comcast stock goes down 7, and then we realize that the storyline has changed for Comcast. Rather than thinking about, hey, it's broadband, we start thinking about signups. David, the Sky signups, they're shocking in the last 18 months. That's a really good asset.
Yeah, 23 million overall customers, of course. Now, people look, Carl, at the direct broadcast satellite business in this country and say, why? Another, DirecTV is hemorrhaged subscribers. Dish has been hemorrhaging subscribers. They worry about that. But Comcast would point out, well, it's a lot more than just satellite distribution. It is the broadband opportunity, it's streaming, and of course, more importantly, it's also content.
Absolutely. It's a big part of the Moffett downgrade. Of course, they were on Squawk this morning. Secularly challenged asset, as they said, pointing to the core satellite business, for which, Jim, they say Comcast grossly overpaid. But whether it's Comcast now, Disney with the Fox assets, AT&T, we keep coming back to this question of how these big media giants are going to demonstrate their willingness, their ability to pay down debt over time.
Look, I felt that the commentary, and look, I listened to Moffett today, and I totally respect their analysis. But what I didn't like about it was just because they paid a little bit more, and it wasn't a huge more, but a little bit more, what happens is suddenly they turn on. I don't want to overemphasize their importance, but I think that they, OPCO, are both the reason why it's down. But what I like about this is, geez, until this happened, Comcast was selling at 13 times earnings, and everyone thought it was a wasting asset. Now suddenly it's a growth business. They're not cutting cord over there. They're taking cord over there. And then suddenly in that analysis, they talk about, well, wait a second, this is short-lived assets that they're buying. Oh, come on. I mean, literally what happened is overnight this story went from being wow, you know what, they can't keep video, to being like, wow, lots of video and overseas and terrific. And maybe they can be a competitor to Netflix, but I always thought that was overblown. What matters is growth of customers. And growth of customers is worth paying for. The balance sheet can handle it. Let's move on and recognize down 7 and then outperforms S&P.